Hey guys, what's up? My name is Ruud Kouwboer and welcome back to my video. And today part 3 of the mini-series of the 8 different investment categories that I personally invest in. So today we're just going to keep going where we left off and let's dive into it. Number 6, corporate loans. So this investment category is rather simple. Although it can be quite risky, and especially if you invest or loan money to a company that just started, there is a risk that they will go bankrupt and you won't be able to get your money back. But on the other hand, if the company is quite stable, most of the time you will get your money back plus interest. So most of the times the interest rate that you can charge is between 5 and 15% per year. Why do companies need money? Well, money is like fuel for companies. Without any money, they cannot operate because they have to pay salaries or other business expenses, and without it, they can't make any progress. And another thing why companies need money is that if they try to expand, they try to develop a new product or a new service, or they want to go to another market, they need to invest beforehand, and therefore they need a lot of money. So companies always look in many different ways to expand their working capital, and one of those ways is to look to people who have some money left over and want to loan it to their company. And of course you would say, why don't they just go to a bank? But banks are not always willing to loan money to a company because they are trying to minimize their risk. And if they don't really believe in your business model, they're not going to give you the loan you want, or they give you a less amount than what you want. So like I said, this type of investment can be a little risky, especially if the company isn't out there for so long and they go belly up. You will lose all your money. But on the other hand, if the company is doing well and they pay you back, you will earn a lot more than if you just leave it on your bank. Number 7, real estate. Real estate investing is one of my favorite investment categories. It's relatively safe and also quite slow paced. It's not like that with a stock that you can decide, oh, I'm going to sell today and you got your money. Because with a house, it is a little more complicated to buy and sell. And then of course there's also a big difference if you buy a new built house or if you buy an existing house from someone. So I, for example, bought a new built house back in August 2018. That's when I signed the contract. And I got the key in June 2020. So that's almost 2 years later when I received the key. And after I received the key, I first put in some extra money in the house to remodel it a little bit to get the value up. And then I chose to sell it. And I sold it around October, September of 2020. But the actual transfer of the money and the house was in February of this year. So between the moment that I signed the contract to buy the house and the moment that I received the money in my bank account took more than 2.5 years. So this is why it's kind of slow paced. You have to go through a lot of steps, and those steps take a lot of time. But at the end, the reward was rather big. And another nice thing about this whole thing was that I could use a mortgage to finance my purchase. So I didn't have to put in a lot of money myself, but I could leverage my money through a mortgage. And of course you have to pay interest, but right now the interest rates are so low that it was really a good deal for me to do this. And if you add all the costs I made in these 2.5 years, and you look at the profit I made, on a yearly basis, I made a profit of 103% leveraging my money, which is amazing. So there you see the beauty of leveraging your money. You can make more money than you would if you just invested your own money. With real estate, you don't only profit if your house appreciates. You can also earn if you rent out your house to tenants. So let's say the total cost of your house are 1,200 euros per month, and you can rent it out for 1,350 euros per month. that leaves you with a net cash flow of 150 euros per month. But then if you use the mortgage to finance the house and you leverage your money, it's not just the 150 that is a profit, because your tenant will pay your mortgage. And after 30 years, you paid off your house completely, and if you sell it, you get the full money in your account. So let's say, let's keep the example of 1,200 euros per month. On average, you will pay around 400 euros per month down on your mortgage. So instead of 150, you make a profit of 550 euros per month. The only thing is that 400 euros per month will not be in your pocket. It won't be in your bank account. So you will only be able to reach that money after you sell the house. So that's very important to take into account. In general, investing in a rental house can give you an ROI of around 10% per year. And the formula for calculating the ROI is rental income minus rental expenses divided by the cost of the house. And so besides the rental income, you also have the appreciation, which historically speaking has been around 2% per year. So although real estate investing can be risky, it's generally a safe way of investing, and if you really know what you're doing, it can be really, really profitable. There will always be a need of houses. And if you look at the macro trends that are influencing house prices at the moment, they favor that the price will go up in the future. For example, the population is still growing, mortgage rates are lower than ever, and the average number of people living in a household is declining. So that means that we need more houses for the same amount of people. So of course there are many more factors that play a part in house prices, but those are very influential on the prices, and especially for the near future, I expect that house prices will keep rising. So if you like my video so far, I would like to ask you to smash that like button. And if you want to learn more about investing or personal finance, please subscribe to my channel and click that notification bell so you won't miss out any of my new videos. Number 8, startup investing or crowdfunding. The last category I want to talk about is startup investing or crowdfunding. I personally only invest in this with a small amount. It's only 1% of my total portfolio. Although it can be very lucrative to invest in startups or via crowdfunding, it's also very risky, and you have a potential of never seeing any money back from your initial investment. And I will explain why. With this type of investing, you will buy shares from a company. So in that way, it looks a lot like buying stock. But the difference is that this company is not listed at any stock exchange. So if you buy a stock of Coca-Cola, for example, on Monday to Friday and within market hours, you will be able to sell it immediately. But if you buy shares from a company that is not listed on the stock market, you have no way of liquidating your investment. So why do people invest in startups? Well, like I said, it can be very lucrative. So if the company does decide to go to the stock market, you are very lucky because you are one of the early investors, and most likely the price will be higher than what you paid for those shares. Returns of 10 times or 15 times your initial investment are not uncommon in this type of investment. But on the other hand, more than 2/3 of companies that raise money in this way will never go to the stock market or even go bankrupt. And you will never see a return on your investment, and you will lose all the money you invested. Another way to earn from this type of investment is if the company gets bought by another company, and they will buy all the shares. I personally use the site Crowdfunding. I will leave a link in the description. You can check it out. Every week they post new options that are out there of companies who are raising money. But like I said, it's a very risky type of investing, and it will take years and years before you can even see any of your money back. Alright guys, that was it. Those were all the 8 different investment types that I personally invest in. I hope you guys liked it. Let me know which one is your favorite, and I hope I see you in the next one. Have a great day.